I wanted to have a day job, so to speak, that allowed me to, run an active income business, but was also going to give me the exposure and the experience and the knowledge to grow a real estate portfolio in the space that I wanted to be in.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. I have with me Anthony Walker with Buckingham Investments, but Anthony is so much more than just Buckingham Investments. I just want to let you know, and we will get a chance to see that. So let me read you his bio first. Anthony is the CEO and managing broker of Buckingham Investments. Just as Buckingham Investments has been doing Buckingham Investments has been doing over 50 years, Anthony seeks to be a trusted advisor and assist his clients with achieving financial independence and retirement security through investing in multifamily income property. He believes that real estate wealth is not created only at the time of purchase, but well before an investment is ever made through education and planning. And if anybody knows me, you know that Anthony and I are like this when it comes to what is it that makes you successful as an investor, education and planning, then the purchase. He teaches frequent seminars in many aspects of investing and has been an invited guest speaker at multiple educational institutions and trade organizations throughout Southern California. Practicing the investment philosophy he teaches, Anthony has also developed an extensive portfolio of income property of his own, the vast majority of which is located in the greater South Bay of Los Angeles. So Anthony, as I stumbled my way through your bio, let's go ahead and start with what got you started in real estate? Because clearly you're both a real estate professional and a real estate investor. So what got you started?
Yeah, definitely a bit of both, especially at this point. I got started because I worked for almost 10 years in the corporate world. I was in the insurance claims industry, totally unrelated to real estate, not even homeowners insurance. I was in private passenger auto for some of the largest insurance companies that everyone has definitely heard of in the Super Bowl advertising space and so on. And that was fine. That was kind of the job out of college. I graduated 2004 out of undergrad. And after doing that for a few years, it became pretty obvious that I was not going to, live the dream, so to speak, right? Doing that. I was going to be pretty pissed at myself if I looked back on a 40-year corporate career of doing that. I was decent at it. I had gotten myself into management and, I had great coworkers, and that's awesome. But I really wanted to figure out how I could take things into my own hands. So I decided to go to business school and get my MBA at night with the express purpose of figuring out what kind of business I could open for myself. I really just didn't want to work for a big company anymore. I wanted to take things into my own hands and do it on my own. And I thought I could do a lot better doing that than, getting a salary for God knows how long. So I did that. I went to business school starting in 2008. I had really good timing. I was originally going to go full time, but I ended up going part time, and that was just a total coincidence. And then right as that was going on, obviously we had the subprime crisis. So I was front and center to that with a lot of great minds learning about all kinds of business concepts because I didn't have that background in undergrad. And during that time, I took a MBA level real estate investing course. So it was really focused on kind of corporate real estate, large properties, started to learn about all these terms that everybody knows, if you're in the space already, cap rates and IRRs and net present. I'd never had finance or learned anything about that. And I was an entrepreneurship student, so I was trying to look at what kind of businesses might work. I was kicking around the idea of a brewery, and I was looking at some consumer goods manufacturing and all these ridiculously capital intensive ideas that sound cool, but actually probably would have been a disaster to get into. And when I took that class, I thought, wow, it's right here in the textbook. Here's how you can do it. You can my criteria for businesses that I was looking at starting was I wanted something that was going to be scalable. I wanted something that was going to require a minimal number of employees because my previous job was just 100% managing employees and employee issues.
Okay.
And I wanted something that could deliver passive income because I just didn't really dig this, hour and a half commute each way and working forever kind of thing. So I was trying to figure out what was going to work there, getting all these ideas, and I, rather than go the startup method, there it was, right? So real estate seemed like a really clear way to do that. Many people for thousands of years in the past have followed that path, and there's a lot of information out there on how to learn it. The big trick was you need some money to buy some property, right? So how do you do that? So I was introduced through my colleagues at business school to Buckingham Investments while I was there and started as a client. And Buckingham is a local Southern California investment property brokerage company, and they helped me buy my first little duplex. I still had my W-2 salary at that point, so I qualified for the loan. This was at the depths of the subprime crisis about 10 years ago now. And so that was fun. I really enjoyed their process of learning how it works in the real world, not just giant office towers and stuff like that, right? And that struck me. So I got my first property. I decided, hey, maybe I could also help other people do this, teach them how to invest, and I could then use my business income, make that my active day job, and buy more property. And so I did that. I quit my full-time job. I became an agent and then a broker with Buckingham. I opened our Torrance office and started helping other people do what I was doing, basically build a portfolio of mostly multifamily properties here in Southern California. And if you fast forward now, 4 years ago, I took over as the company's CEO so we can continue to grow. Company's been around for over 50 years. So the original owners, one of them passed away. The other one is mostly retired. You may have met him before. I know you know Marty. And so the day-to-day is up to me and the team here. But I've been really fortunate to be able to build my own portfolio as well. So I have about 15 buildings now here, just myself. I don't syndicate and raise funds. I have in the past, but not currently doing that. About a little over 100 units. And then, we do a pretty brisk brokerage business helping other people do the same thing.
It's funny, complete side note. I don't think Marty probably ever remembers me. Yeah, I remember him, but I'm one random chick who showed up one day in his office and said, I've read your book. Can I talk to you? And I talked to him I think my husband. Yeah, I'm pretty with my husband, I'm trying to remember, like, was it my husband? Was he my husband at the time? Was he for me, my fiance? But whatever. But I talked to him and I remember sitting around the table and having like an hour-long conversation with him. And I'm like, that's Marty Stone. Man, there's so, because this was years ago, right? I've been married for 14, almost 14 years now. So this was literally, I've been investing for 30 years. So this was a little more than halfway into my investment career, right? So so I'm sure he doesn't remember me, even though he's an unofficial mentor in my mind, because I started with, everybody has that Rich Dad book, right? Yep. I read the Rich Dad and I read The Unofficial Guide to Investing in Real Estate. Those are my two books, my two cornerstones. So Marty will always be close to my heart for no good reason other than I read the book.
I love it.
I read the book.
I'm so happy we made an impression on you.
Yeah, you guys made an impression on me. So that's good. But I guess one of the things that stands out to me, though, is, you described perfectly how you transitioned from effectively what was a W-2 with the instinct and the desire to have control over your own life, which we'll talk a little bit more about later, into finding a JOB, which is being a real estate agent and broker, but you needed a JOB, right, in order to do your own investing and continue your investing. But now you've made this perfect, symbiotic relationship between being a real estate broker and being an investor. I mean, that's got to do nothing but help on both sides.
Absolutely. It was somewhat deliberate once I kind of identified what was involved in the brokerage business. They're totally complementary businesses, right? So, I mean, to provide a tangent, right? I can't tell you how many people have come into our office and I don't know what seminar they went to, but they're like, I just quit my day job. I'm ready to do real estate full time. I have no income and no savings. What do I do? And the answer is, okay, go back and get your job.
Right.
or you can work here if you want to.
Let's backtrack a little bit, right? Yes.
But yeah, no. So I wanted to have a day job, so to speak, that allowed me to, run an active income business, but was also going to give me the exposure and the experience and the knowledge to grow a real estate portfolio in the space that I wanted to be in. So, brokerage in my mind is the perfect way to do that. I think, running syndications is great for that too. Working for larger funds or an asset management company works, or running, the debt can be a really good way to do that. But I think brokerage is particularly perfect because as a broker, you really see every aspect of the industry and of a deal. So you're kind of the quarterback, right? You find the deals, you have to know the market, you have to see what clients are doing, you have to know what works for financing, you have to have realistic, numbers and expectations with regard to performance, you have to be able to forecast returns to some extent, you have to know what's going to happen in escrow after close. If you're a good broker, you should be staying in touch with your clients and helping them, manage their properties. You have to have good relationships with property managers. You have to know a little bit about taxes because what you're doing with people is going to have tax implications. So to me, that was the perfect gig, so to speak, to get me all that, very quickly get me that experience and exposure so that I could then take advantage of that and build my own portfolio, on top of the fact that you get to see all the deals come across your desk. And there's that unlimited earning potential, right? That they tell you in the boiler room or whatever. It's actually real if you're a broker. If you're good at it, you can really do well and you can make enough active income to buy properties all the time. So those two have been kind of perfect for me. And then the property ownership part of it, and I didn't consider this at the beginning, but this is what was so beautiful about Buckingham's model, is that all of our agents are investors. So we're investor agents and brokers. And so because we want all of our agents to also buy, everyone here has the experience and the credibility to help people do the same thing. We didn't just switch over from some used car lot to come over and sling properties and put our suit and tie on and give you the hard sell and, all of that. We're actually doing it. We're practicing what we preach and we're in the market. We're taking our licks and we're continuing to go. I'm sure we'll talk about that later.
Yes.
But so that, both businesses really help each other out so much. It was kind of a no-brainer.
So I have a story to share with you. So I was invited one time to come speak at a commercial real estate office, right? This guy knew me from my meeting. He was the manager or head person at this particular office. And he said, look, I need you to come talk to my agents. And I'm like, okay, I'll come talk to your agents. What do you want me to talk about? Talk about investing. And I'm like, okay, well, they're real estate brokers and agents. They should know something about investing. He's like, no, you don't understand. You need to come talk about investing. And I'm like, okay. And I was kind of unprepared for this. Truth be told, I was unprepared for this because I'm talking about how do you approach investing? What's the best, like my investor profile, right? I just pulled off I have 7 topics and I just grabbed my investor profile topic because it's a good beginning topic for approaching real estate investing. And so I'm going through like, how do you find contacts? How do you build your network? How do you understand who you are as an investor? And at one point, somebody basically said, what do you mean by real estate meetings? And I kind of went, what? Right? What do you mean by real estate meetings? I said, real estate meetings where investors are. And they're like, we don't know any of those. And I'm like, well, what meetings do you go to? Well, we go to other meetings with other real estate agents. We go to agent meetings. And I'm like, you'll find access to investments, but you're not going to find investors or other people's money or protocols or education on being an investor if you're not going to real estate clubs. And they're like, well, where do we find those? And I'm like, on meetup.com. Like, this is not that hard, dude. Right? But then, and that was one point. And then a little further down the line, I said, how many of you guys want to be real estate investors, which is part of my thing, right? How many of you want to be a real estate investor someday to sort of get a sense for the audience? Right? And they're like, well, a lot of them raised their hands. We want to be real estate investors. I said, how many of you are real estate investors? I think there was 2 in the back center of the room. The guys hanging out in the very, very back.
Yeah.
Right? The ones in school that were never going to accomplish anything, right? Are the ones that are actually investing because their alternative thinking allowed them to go, yeah, investing, baby, not just because it seemed like they were so ingrained in the thoughts of investing and the difficulties and the hardship and the numbers and the constraints and the guidelines that none of them actually transitioned into becoming investors. They didn't entrepreneur themselves from the box to being an investor. And of course, we found out, like I said, how many of you joint ventured with somebody, like given up your agent's fees to take a piece of the deal? And of course, it was one of the guys in the back.
Yeah.
All the rest of them were a little like,
I want my money. Why would I do that?
I want my money. Why would I do that? So I think it's really important. I just wanted to highlight with my story, like I think it's really important that people understand what is the difference between a real estate agent and an investor's agent. And I find this incredibly true, profoundly true in single family residential.
Oh, yeah.
Single family, 4 units or less. There's a very clear distinction between somebody who's a primary residence buyer, right, or agent, and somebody who's an investor's agent. Total different language base.
Yeah.
Right. But I've now, having spoken at this club, I'm now clearer that is also true in the quote unquote commercial world. These guys bought and sold commercial properties, including industrial, office, and multi-units. And clearly they were not jumping into an understanding of what does it mean to be the one at risk, making the assessments and putting their money on the line to make the deal. And there's a whole nother level of understanding if you're the one who's at risk versus, gee, I'm just telling you what the numbers are that I was taught.
It's astounding how much of that there is. And I think, if you go to a lot of these places, in the training, you learn how to put together a setup sheet, right? Which kind of helps you value a building, price it, and get it on the market. But there's so much more that goes into making the investment decision, right, than that. And so many of these people they never do it. Like you said, I can't believe that they don't. To me, that's the only reason to be in brokerage.
Right.
It's a slog.
Yes.
It's a lot of work. It's really hard, and
Yeah,
like,
it is.
I'm gone once my youngest daughter goes to college. So get it now, but
That's right.
I don't understand why.
Once we're done with the need for a distinct high cash flow and wanting to not burn my accumulating assets on my lifestyle so that I can let my accumulating assets pay for my lifestyle, right? Yeah. Yeah, I'm sorry, I interrupted you. I apologize.
No,
I agree with the concept, which is, the reason to be a real estate agent is because there's such a good symbiotic relationship
100%.
between, helping investors invest and investing and really understanding their desire, their story, their needs, the questions they need to be asking. Why do I want to get a physical inspection and electrical and plumbing and roof? It's like, well, isn't the physical inspector going to cover that? Yeah, but you're not going to have your estimates and you're not going to understand how to be able to have the conversation in the escrow process of actually closing the deal.
Right.
And I know how many people are like they literally ask me, Christina, do you always get a physical inspection? I'm like, yeah. Why do you always get a physical inspection? Isn't it unnecessary? And I'm like, no.
Every time.
No, every time. Every time I get a physical inspection, it is my punch list. It is my next 5 years punch list is that physical inspection. I pay $800 and I have what I'm supposed to do with the building for the next 5 years.
Totally worth it.
It's a great investment, right? Not only that, oh, by the way, I actually know what I'm buying. That's also helpful.
That helps.
That helps. So if you were getting into, like, when you have a client who comes to you and they're a newer investor, what are the things that you find you need to teach them along the way? Like, I kind of covered a couple of them, but what do you find the conversation looks like, and what do you need to teach them along the way, being an experienced investor?
Yeah, I mean, it depends where they're coming from, what their background is. But I've found that even experienced investors often never got the basics at the beginning. Even if you did take finance in college or you have a business degree, people get away from that. And most people don't have that kind of background. It's too bad that they don't teach financial literacy in high school. They really should. But so many people, if they have experience, they're stuck in analysis and, cap rates and expenses and details and IRRs. And if they're not experienced, they're just overwhelmed and they don't know where to start. So, really backing up and focusing on how compound returns work to begin with, the math behind the time value of money equation. We harp on this all the time, right? And it's the most basic concept, but you'd be amazed how many people never got that to begin with, or jump into investing without understanding how that works. So focusing way back on just the variables of that, right? Future value equals present value plus times 1 plus the rate of return to the power of n, where n is the number of years your investment compounds, and so on, and turning that into a basic plan. That's it. It's like, it's so silly. You can play with this on like your cell phone, calculator app, but people come in with no investment plan. And if you have no plan and you don't understand how that works, there's no strategy behind what they do. And somebody gets sold a deal by somebody, right? They find it, either it's a syndicator or it's an agent or it's a wholesaler or whatever, and they get sold a good deal. And then they're like, well, what do I do now? What do I do with this good deal? Where is it going to get me? So, really focusing on the long term and the big picture is the piece that, in my experience, everybody misses. Even the experienced people miss that. So we really love to cover that right from the very beginning, talk about, decades worth of research and kind of begin with the end in mind, right? As Stephen Covey says. And that's delivered better results than anything I could tell you technical wise, although we have all that too, of course.
Well, that's one of the things, I remember, again, my 1 hour visit into Marty Stone's office, where, I don't think it got on to take, I guess it sort of did, like this 1 hour visit I did of Marty, I of course hold Marty because, like I said, he was one of my unofficial mentors, right? I read his book and I was like, oh, this is what like he had me off and running on the 4 types of return on real estate, right?
Yeah.
We came from Marty, right? So I still don't tell Marty, but I still use his Excel spreadsheet format for generating my returns on my real estate portfolio. I still do.
The quickest and dirtiest one. It's the quickest and dirtiest one.
It's the quickest. Yeah, it's quick and dirty. Like, it's got all the basic lines in it. It's got all the basic returns in it. It gives me the bottom half gives me all my, all the numbers I really need. And I can't really cheat. I can't really lie to myself too much on it, right? At least I try not to. I guess you could if you wanted to, but I mean, being able to be, Buckingham has such a deep and rich history in research, because that's where Marty and his partner originally started, was in this deep understanding of, real estate is a bit of it's like any commodity. It has a behavior pattern to it, right? So beyond the numbers, which you guys have available, there's also an understanding of the behavior patterns of real estate. And you guys specialize in the South Bay in particular. So you really understand the behavior patterns of that asset and how it behaves in that environment.
Absolutely. I mean, another piece of advice on that, right, is we've really specialized over the years. And at the beginning, when I started buying stuff, even though I was a client at Buckingham from the beginning, I kind of bought stuff all over the place. Like, I went out to Las Vegas, we bought like a new construction house and some condos and some land, and we did all this stuff. And I bought some stuff over here, but at the end of the day, we came right back to Southern LA County, multifamily, and that's it. And so really just understanding your little niche and how everything works right in that little market, wherever you're operating, is going to be key. You can make money, I think, in any market. I'm convinced. I'm totally biased to, Southern California, South LA County real estate, obviously. But I think you can make money anywhere, especially if you specialize and understand it. And we're really fortunate here in our little corner of the world to sort of have a perfect middle ground between investing in a low cap rate, broader market that means super strong appreciation over a long period of time because of our supply constraints and a practically unlimited amount of demand, and still access to deals that have a high enough cap rate that allows you to use decent leverage to buy properties and then basically ensure that you're going to be able to get really strong returns over a long period of time. So, again, kind of coming back to that long-term horizon, if you have all that stuff together and you can put it together into a long-term plan, you're going to do way better.
So you just hit some really important details that I'm not sure a younger or a less experienced investor would understand, because the South Bay market, the animal that the South Bay multi-unit market is specific. I was talking with a client who was investing recently, and she bought something that was just outside of Silver Lake. Yep. Right. And she's like, is this a good buy? And I'm like, okay, look, you can buy a Dalmatian, you can buy a golden retriever. This is a Dalmatian. Let me explain to you about how a Dalmatian is different from a golden retriever, because that was the best way I could make it approachable to her, right? As a younger, not in age, but in experience level, as a younger investor. And she was kind of doing this gunshot approach to investing, right? Which is why she came to me and said, help me, figure out my portfolio, right? So I'm like, okay, good. I see the gunshot approach. Let's focus you in on what it is that you're going to go deep on so that you have a solid portfolio that has a trajectory of growth associated with it that's anticipated, right? So let's talk a little bit about the Dalmatian that South Bay is. So why don't you go a little deeper in what does it mean if you accept a South Bay multi-unit building? And you can compare that to a Midwest building if you want, but really let's talk about what does it mean and how you be successful in that market.
Yeah, so I mean, the big advantages of buying here is if you think about a map of Southern LA County, especially South Bay in your mind, this right where the coast curves, right? So we're surrounded by ocean on two sides, mountains to the north if you go up, to the Sepulveda Pass, and 100 miles of city to the east. And basically nowhere to add a significant amount of additional supply anywhere in that geographic block. So we have a geographic constraint. If you are adding additional supply, it's usually high-end, Class A luxury stuff because that's what pencils for developers. And then within that same market, you're in the LA Metro. The LA Metro is the third most productive metropolitan economy in the world. So $1.05 trillion is the gross metropolitan product. That's after only Tokyo and New York City. So all the headlines about everybody leaving LA and California, fine. That's okay. Pandemic discussion, job growth, markets, fair. But we're not going to lose enough people for it to really make a difference here. So the huge advantage is you have
people pour in. As people
do.
leave, it's the outside edges that actually have the hardest hit, because if they're capable to pour more closer to the ocean and more towards city center, they will fill in what's leaving.
Totally. And what's leaving is the lower income people that really can't afford to live here anymore. And then we get higher income jobs going into all kinds of, we have a really diverse economy here. You have tech, you have aerospace, all kinds of stuff, right? Entertainment, of course. And so, the net population change might be, like negative 30,000 people a year in a 10 million person market, but you're trading low income people for high income people, which then has a natural effect on values and rents and all that kind of stuff, right? So the juxtaposition between that supply constraint, which is permanent at this point, we can't possibly solve that, and a practically unlimited amount of demand is what makes it so attractive to invest here. And on top of that, you've got, in the South Bay specifically, unless you're investing in San Pedro and a couple other, cities on the county strip, you don't have LA rent control to deal with. So, on a micro basis, city of Los Angeles rent control is very strict. State of California rent control is pretty mild and pretty easy to deal with. A lot of people are afraid of that too. That's nothing to be afraid of. And so you're basically, if you can buy in kind of second ring in from the beach type locations, or right at the beach if you're in Long Beach where it's still pretty reasonable, then you're getting this perfect kind of middle ground investment where you're taking advantage of those supply and demand imbalances that gives you long-term appreciation, but you get a pretty decent cap rate on the building. You can buy stuff in a lot of our markets, at a 4.5 cap. And I talk to investors that are looking in the middle of the country, and that's their strategy, and that's okay. And they're looking at 5 to 5.5, and we're looking at like 4.5 to 5. So, for 50 basis points less, you're buying coastal real estate, which, guaranteed you're going to do well over a long period of time on, and you get that extreme imbalance. I think to me, it's a no-brainer,
And I think the thing that, part of why I call it a Dalmatian is you really are buying for appreciation. You're not buying for clear cash flow up front, whether it's a 4 cap or 4.5 cap or a 5 cap. You're not going to, part of how you make money is the space between the interest rate and your cap, right? So it's part of how you make money, right? So you're making returns above and beyond the cap you get on your piece, right? So let's say you put 30 or 40% down, which is probably relatively common, I'm assuming, is you put 30 or 40% down, at least 30, probably closer to 40. And then you earn your cap rate on your little 40%. Right. But the way you make money on leverage is that you get a little bit of the cash flow off of the part that's leveraged, the space between the cap rate and your interest rate. And interest rates being so low, right? Then a 4.5 cap allows you to get a little bit of that. And that's not even covering the appreciation conversation. That's just covering cash flow, right? Because the leverage is really powerful in appreciation.
It is. It's ridiculously powerful in appreciation, but as you say, with the cash flow, it's really effective too, because you've got that, we call that positive operating financial leverage, if you want to sound really fancy, right?
That sounds very fancy. I only know the concept. I didn't know the word. Cool.
There's a mortgage constant, which is actually, anyway. So, but
it's good. No, it's good. It's good to be the professional. It's okay. Be the professional, Anthony. It's all right.
But you're absolutely right. Like, if you can buy buildings where your cap rate's a little higher than your cost of funds, again, to sound fancy, then you're going to do well across the debt and the equity placement. And what people don't understand is, in a really nice market like this, the financing is way better. So the lenders, I believe, call this a tier 1 market. There's very few other markets in the country where you have such ready access to capital. Lenders want debt deals here in our area. You will get the best terms available in the entire country buying real estate here. You might have to put more down depending on what you buy because of the way that debt coverage ratio works. But because of what we have here, you're gonna be amazed if you go to some of these other markets that are maybe, more in the middle of the country or middle of nowhere even, you're not going to get the same type of deals on the debt, and it totally changes the economics of your deal. And yeah, although the cap rate might be lower here, the way your investment actually performs can be way better.
Well, especially if you're building a longer term portfolio with a longer term focus, which is what you're talking about, right? So when your daughter graduates college is when your portfolio needs to start performing on a more cash flow front and less on an appreciation front. And that's why I call it a Dalmatian versus a golden retriever, right? The Dalmatian is appreciation, and that's the purpose of the purchase.
Right.
Is the appreciation and that longer play versus a golden retriever that's going to shed every day and give you lots and lots of cash flow, but may not appreciate at all. There may be, I've owned in the Midwest. You can literally own for 5 years, 8 years and never see what I consider to be more than true appreciation, which is like 2 to 3% the whole time.
Right.
Not well, I think there's that year.
There's a lot of misconceptions out there too about, when you say, well, I'm primarily buying for appreciation, wealth generation, people say, well, how do you ever make your money? When do you ever get to use your money if you're not buying for cash flow at all? And it's not that I'm not buying for cash flow eventually, it's that I'm not buying for cash flow right now. And so people love to look at a deal as a snapshot in time at the moment you purchase. And there's very little focus paid to how your investments, your whole portfolio, a property is going to perform in the future. So to get back to that, I'm going to make a really small cash on cash return on my investments today. I'm going to probably make like 3 to 5% or even 0% cash on cash, depending on what I'm trying to do with the building. But if it's a smaller percentage on a much larger number in the future, that's that future value number again. I like to calculate cash return on equity at any given point in my portfolio's life. So if I can forecast cash return on equity to be about 5% across the life of my portfolio, which is very doable here, and I can grow a portfolio that's going to be worth $20 million a few years from now, when my daughters go to college, 5% at $20 million is not bad. I can live on $1 million a year in passive cash flow. And then you still have that net worth to fall back on once you're there, that's the strategy. So I think the misconception out there is, well, if you're buying for appreciation, don't you just have to sell and then pay the taxes and all this? And when do you ever get the money? That's not the point. It's that I don't need it right now because I'm still working hard in my active income business, and I will have more later than I would had I went and bought something somewhere else.
And it's forced compounding, right? So it's compounding on itself, which is what we care about. And it's forcing it because it's not paying it out to you as cash flow. It's residing within the building, right? Which is actually very helpful for some people in the behavior pattern. But then the exit strategy is like, oh, but then I'm stuck with 20 million. Oh, you poor thing. You're stuck with 20 million. But then what do you do with your 20 million? Well, if your investment goals change, then you adjust your portfolio appropriately, whether it's refinancing and taking that money and placing it in a different style of asset, or selling the whole asset and doing a 1031 exchange, or selling the whole asset and moving it into a syndication that takes 1031 money that gives you a higher, income. To assume that you're stuck is inaccurate.
You have so much flexibility when you have that kind of chunk of equity behind you.
Yes,
you have so much. Yeah, you can trade it into a DST. You can put it in a deferred sales trust and not pay taxes. You can just keep the real estate and live on the cash flow. You can die and pass it to your heirs and get the step up in basis. You can go to a syndicate. Yeah, I mean, you could at that point then exchange it into higher cash flowing triple nets, whatever you want. Yeah,
Right.
totally.
Yeah, exactly. So to allow it to come, and so therefore it's the Dalmatian plan, right, versus the Golden Retriever plan. Like it really is like, yes, why do people continue to buy in Southern California is because it meets a particular investment goal.
Right.
And your market meets your goal, or your goals can meet your market. You choose. But of course, when you bring people in, the purpose is to educate them so they understand the asset they're buying.
Yeah.
And can their goals be met this way? Is the whole conversation you have with them before you even buy them go out and say,
Right.
hey, let's go look at a building. Or maybe you have them look at a building just so that you can keep them interested while you're educating them. I don't know how you do it.
As an example, I don't like to show a property on our first meeting if we can avoid it. Sometimes people really want to see something, but that's again what a lot of people don't understand is most people aren't in real estate to own buildings. Like, who cares? Who cares about that? I mean, you want to own your house. It's nice. You live there. You get enjoyment out of it. I don't get any enjoyment out of the apartment buildings I own. People come in to own buildings so that they can achieve their goals. But people get turned around and forget about the goal part and get sucked into the building part. So yeah, I totally agree. It's way more important to talk about goals and what you're trying to accomplish first. And there are occasionally people that we'll talk to that our strategy here is not right for them. And that's okay. That's perfectly okay. We'll be honest with people about that.
Yeah, and it fits because you guys are an expert in a particular market. Right. You don't want to be like you said, you don't necessarily want to be an expert in everything, right? Across multiple markets. And, you know this, it really deep and you know it really well. And you can really help people walk through that particular set of waters to achieve this piece inside of their portfolio, whether it's their whole portfolio or a dynamic inside their portfolio. You guys know that really well. And I know that, and I can say that with such certainty because I remember I was talking with John, right, I don't know if he's still with Buckingham.
He's not.
Okay. I was talking with John when he was with Buckingham, and he's the one who started talking about this sort of like, here's how this Dalmatian works. I'm sorry to keep using the Dalmatian concept, but here's how investing in a highly appreciating asset works as a multi-unit. And I kind of went, you don't understand. I'm an old investor. I bought in Van Nuys when cap rates were 7% and my interest rate was 4.5. Right? Like that's what I bought. That's what I know is this, this crappy 18 unit I bought. That was my first building. Right? I'm like, I don't know this concept. Right? And he was the first one to sort of like whisper it into my ear. And I'm like, oh, my God, real estate investing in this market has distinctly shifted, but it doesn't mean it doesn't work. Right? I had to bring my own thinking up to speed to understand the investment goal and the investing process associated with what's now available in the South Bay with these solid A-rated, good quality assets that last a long period of time, that grow on a solid appreciation, that the infill is actually supporting it, not hurting it, and being able to grow it as a stable investment is a very specific style, but very useful for anybody who's got a length of period of time or doesn't need a high level of cash because they have a large enough portfolio, but they're looking for good quality, stabilized assets that will ensure that the principle of that they worked so hard to grow will stay intact for that generation, even generations further.
Absolutely.
Right? So there are definite buyers that want that asset class and that style of investing.
There's an incredible amount of capital that's interested in that. I mean, people all the time, they're like, why would anybody buy anything here? And the answer is, well, look around you. There's billions of dollars that wants to buy here.
A lot of people own here. There's a reason why a lot of people continue to own here. Okay, so let's get on to you as an investor, right? Yeah. So you as an investor probably have had some great experiences investing because you said you own over 100 doors, I believe, right now. Yep. So you've clearly had some good experiences in investing and you keep buying in real estate, but you've probably had some pretty crappy experiences based on my 30 years of investing. Every long-term or longer-term investor will eventually have a crappy experience or 5 in their investment career. So tell me about your worst experience, how you solved it, and what you learned from it.
Excellent question. So yeah, I mean, there's been a lot of trials and tribulations along the way. I don't know if I can pinpoint one exact worst experience, but I'm going to give a
Pick
great
one.
example that shows how everything's interrelated, because this is more of an issue of bandwidth is my example. So I was starting to get really aggressive with my portfolio going into like 2016, 2017. I had developed enough buildings and equity where I could kind of pull a lot of levers, make a lot of moves. I knew enough about how the industry works and how I could access capital and equity that I could get myself into trouble. And so I proceeded to do that. And so
I have to. It's okay. We're all there with you. It's okay. Really, trust me.
it's not that long ago, even, right? 4 or 5 years ago.
Right.
So there's a particular point in time I'm thinking of. I bought 4 buildings in 4 months.
Oh.
And
Even I would recommend you don't buy 4 buildings in 4 months.
it was a lot. I have this addiction. I just cannot.
It's a lot of work. Yeah, I'm a little
stop.
like, no, you can't stabilize a building. Like I've got a client who keeps going, you mean I can buy 1 building every 6 months? And I'm like, yeah. She's like, isn't that too fast?
That's perfect right there. That's
Buy
just,
1 building every 6 months, right? It's very stable, very calm, doesn't overwhelm your life. But 4 buildings in 4 months. Let's hear the story, dude.
I'm gonna describe the tangled web a little bit. Okay,
Okay,
so
go for it.
So, building number one, I had converted a condo that I used to live in to an Airbnb. I got banned from the HOA for doing that.
Right.
So I sold it and I was able to exempt $250,000 of the gain exchange. The rest, and I bought a 12-unit apartment building with a bridge loan at 10.5% debt that was due in 6 months with rents that were 50% of market, 100% upside in rents, totally beat up. Declaration of substandard property recorded against the building, which prohibited standard debt, transaction number one. In order to buy that, I had to cross-collateralize another 6-unit that I already owned that was in process that had a conventional loan on top of it, okay? Transaction number two, I exchanged a building that I owned that it was a 5-unit, sold it and exchanged it into a office building that I was going to remodel to be our company's headquarters.
Okay.
So it was vacant. So I did that exchange with an SBA loan, 85% leverage there, needing architects and plans and renovation budgets. And I thought 75 grand, no problem, we'll move right in. Okay.
No problem.
Bought another building with just brokerage income that I couldn't resist. There was a wholesale deal that came to me, just a 4-unit, another value add though. Somebody living in one of the garages. There was a entrepreneurial individual in one of the units running a number of illicit and illegal businesses out of one of them, standard story there, right? Also with a bridge loan due in, that one I think was due in 12 months. And then I bought a 4th building, which was a mixed use property, which was in a non-conforming configuration from a property management company that had owned it previously in Long Beach to be a partial investment and then move our Long Beach office into that building because I could return it to a permitted configuration and it would be a great deal. So we've got 3 deals with bridge loans and 1 owner user SBA loan, all of them value add, all requiring special amounts of work. And I had
any one of them sounds like a perfectly good creative entrepreneurial deal.
Yeah.
Any one of them, but did I tell you my previous life, I was a small business management consultant and I'm busy calculating time in my head going,
yes,
dude, like, okay, keep going.
I'd also just gotten married and we'd moved into a new house and that also needed to be fully remodeled. And I had that year taken over as the CEO of Buckingham Investments. So
right.
I had plenty of time, to do all this stuff.
Tons of time.
So the message is really that, like, I took on a little more than I should have probably. Yeah. And, the time commitment is one thing, but then the capital, what each deal required changed so much, and the timeframes that were necessary were so tricky. So I did get the 12-unit turned around and refied in 6 months, and I got the declaration of substandard property removed. And that one took like $200,000 to turn it around. That was a resounding success. I refinanced at a valuation of $700,000 more than I paid for it 6 months later. So that worked fine. In the middle of that process, the building that I had cross-collateralized to buy it, though, the first lien holder did a title search on that and found the cross-collateralized bridge loan. And I got a notice of default on my stabilized building that I had used to make that one happen. So there was a little bit of scramble at the end there to make sure that the refi came through. And I said, oh, I didn't know, and it was fine. And, I didn't think it was a problem, right? Yeah. So there was that. The office building turned into a total fiasco.
Okay.
What I thought was a $75,000 job turned into a $500,000 job.
Okay. I understand 75. I've seen 75 to 200. I haven't seen 75 to 500. Okay. I admit I have not seen that one.
Yeah. I'm used to doing apartment buildings, right? They're easy. So my experience was in, oh yeah, we just do some cabinets, some counters, and take down a couple walls, no big deal. Well, when you have an office building and you're open to the public, the city has a few things to say about this. So this is an old 1960s office building that was originally an apartment building when it was built in the 40s, has no ramp, it has no ADA, the restrooms are tiny, there's stairs in weird spots. Things got messy quickly. So that I still own that building. It is vacant to this day. I closed in September of 2017. Here we are 3.5 years later with a vacant office building. Now I'm looking at potentially converting it to an apartment building and having it be proof of concept for like a change of use investment pieces. So maybe we'll get some lemonade out of that lemon, but I don't know. The holding costs at this point are extreme. Luckily it was an SBA loan, so they, CARES helped, the COVID helped me out on that one.
COVID helped you out on that one. Okay, good.
That one was a total disaster, right?
Okay.
And then I did pull off the mixed use conversion. That worked perfectly. Our Long Beach office is there right now. I refinanced out of that one, and I did pull off the 4-unit value add, refinanced out of the bridge loan there and got it done. But again, coming back to the brokerage business, had I not had pretty good set of, brokerage income and deals going on at that time, I would have been in real trouble.
That's a hefty cash flow load. I go to time, but what you're bringing up is time management, cash flow management, both of them. I mean, that's a lot of commitment, have money going out the door.
And then the time to deal with these deals, because that's what stresses you out more, distracts you from the business to earn the money that you need to fix the problems that you created, right? So the same complementary nature of the two businesses I work in, which are normally good, they can get intertwined and they can complicate things. I like to say revenue solves all problems. So, you just throw enough money into the wood chipper and eventually it works out.
Generally, yeah, that's true.
But that's not a good way to go about doing your business.
That's not a good way. I mean, it is a solution set, right? I mean, the one, out of the 4 projects, the one that ended up being the lemon, right? You got 4, which, you spent a lot of time and a lot of money straightening out. And a lot of stress, and I'm surprised you don't have a lot more gray hair. I'm just saying.
Blonde. It actually is. It's just because it's blonde.
Is that what it is? It's not showing up. So, I would suggest probably a lot of gray hair over that one. You got 3 of them to be, at least one of them was clearly a slam dunk, right? 2 of them clearly worked out. You've got one that you're stuck with, and your answer is to not give up on it, but to convert it one more time.
Right.
Right. That's that. And that is the answer. I mean, in real estate, you convert it till it works, or you sell it at a loss and say, let somebody else put the time and energy into it because I'm done with it. Not because it can't be saved, but quote unquote saved, but that it needs to be readjusted. It needs to be, moved on. So I guess what did you learn out of it? I'm busy getting to the what did you learn out of it. So how did you solve it? Well, you brought 3 of them to conclusion, and the last one's still hanging out there. So how did you solve it? What did you learn?
Well, I think we'll solve the last one way or the other. Well, whether it's going to be resold as a permitted office building, not a great time to be doing that, or whether it's going to be resold as an apartment building, maybe that is a good time to do that. It's going to work out. I definitely learned you got to be careful with what you take on. There's always good deals to look at. Your bandwidth, your time, the capital required is always going to be more than you necessarily know. And you have to just be ready for that and kind of plan your acquisitions more appropriately. I like to do 2 deals a year. If I can spread them out evenly, that's great. I can use the rest of my portfolio to stabilize them as they're going along. That's a much easier way for me to grow my portfolio. But the other really important lesson out of these is you have to and you mentioned this earlier, you have to constantly be reevaluating your situation. With each building, is it still the correct exit strategy? Do I need to rethink this? And so like that office building project was a great example. It started off as it was going to be a really cool, owner user opportunity for our company. And now that, it's gone through 3, or maybe we're even on our 4th iteration of what like the plan is with this building now, I could do that forever and just throw money at this thing and, it would never work out. But at some point you've got to like commit to deciding what your disposition strategy is going to be on an asset and do it. So, I think what I've learned throughout that process is to just, you have to constantly reevaluate, but then when you commit to doing it, follow through, finish it off, move on. If you have just too many things hanging over you all the time, it's just going to bog you down and it stops you being able to execute on the rest of what you're doing.
That's a really good description. That last summary was ideal. Like that was just like, yes, if you get too bogged down in any particular thing, it just literally becomes difficult to manage the rest of the portfolio. Like, I guess it's perfect in that I haven't heard a lot of people talk to it. I guess you have to get into the overwhelm state to understand the lesson of what it means to have something you're so bogged into that it's literally hampering it may only be 20% of your portfolio. Right. It may only be a piece, but it's hampering the other 80% in your capacity to run that 80%, which is why, in my world, if you're going to take a calculated risk, which you took 4 very good calculated risks from the sound of it, right? And you got 3 to work out, right? Yeah. And the one that was a slam dunk probably helped forgive, the other 2, made the other 2 look really great. But now you're stuck with this one fricker that's just, that isn't, for a variety of reasons. Whether it's the building, whether it's the timing of COVID, whether it's the city putting a bunch of regulations in place that you are unfamiliar with because you're in a new asset class. Right. Like I'm like, yeah, take those on, but take them on inside a percentage of the portfolio with a percentage of your time, because the other 80% still needs your love and care and direction.
That's the best advice. Yeah.
So it's the 4. It's the taking on the 4. So it's the Marines, right? You've heard of the call of the Marines, young, dumb, and full of fun. Right? Like that. Yep, you did a straight up Marine move there, dude. Young, energetic investor, ready to take on the world. You're conquering the mountain, and you climb 4 mountains in a row, and you're exhausted, and you learn.
YOLO'd myself right into that. If you're a Wall Street Bets sympathizer.
I'm sorry, say that again.
I YOLO'd right into that. If you're
YOLO'd, there you go.
Never go on Wall Street Bets, right?
There you go. Exactly. So there you go. So I think it's an important lesson. And of course, the lesson that I find is true in almost all of these stories when I talk to people is you stuck it through. Yeah. Right. Yeah. I mean, that's the basic determination of commitment and execute. And you stayed with it, because the only way you get the 700,000 on the back end is that you finish it.
Got to finish it.
You got to finish it. You start it. It's a pain in the ass, but you got to finish it.
Can't win them all. And I'm going to learn a lot. I learned more about, redevelopment and ADA and office rules and zoning and CUPs than I would never have been able to learn that going to meetups and seminars.
No, and especially not our meetups and seminars, because we have a tendency to be in more of the mom and pop range, right? So, basically like 20 million or less are the people who have been equity and less who show up in our generally aren't doing development. Right? They're generally more in small office, small retail, maybe triple net or single net commercial properties. They're not developing Westfield malls.
Right.
Right. So tell me, obviously real estate can be a pain in the ass or a pain in the backside. And so what is it that has you stay with it? Why is your financial freedom so important for you as an investor? Why not just be a broker?
Well, I think it comes back to the original characteristics that I wanted to get into this for a business. I'm not a broker because I love selling real estate. I love doing deals, and it's a lot of fun, and it's a lot of fun helping people learn and see people be successful. And by being a broker, I get to do lots of deals, which is fun for me. But that, back to our earlier conversation about some brokers not even taking advantage of investing in stuff, it would be a shame if I were 80 years old and still slinging apartment buildings, right? That is not the plan. So, I have at least now, if you look at the time value of money graph, right, it's flat at the beginning and it doesn't do a lot, and then it starts to do this and then it does this, right? So I'm like I'm like, here,
Yeah.
things are starting to get really exciting for me. If you're into the cash flow game, right, and the rich dad poor dad, I've just exited the rat race, like basically in the last year or two. My assets pay for all of my liabilities. That includes my house, overhead, that kind of stuff. Additional discretionary spending, not yet. But I've definitely now been in it long enough, I can see what it does. So if I really, I don't know, if I got like horribly injured or something and I couldn't do brokerage anymore, I'd be okay. And it's amazing to have that to fall back on and see what that's going to do for me in the future. And really thinking about early retirement. I was fortunate enough to start doing this when I was in my 20s. I'm turning 40 this year, so I'm feeling a little older these days. But now,
Congratulations.
well,
Life is
thank
much
you.
better in your 40s, just so
Hey,
you know. I
I've
think it's
heard. Yeah.
better.
My
Yeah.
wife tells me it is. She's
Yes.
old. So I'm really lucky to have the privileges now in front of me and to be able to see how that's going to work, that real estate allows. The lifestyle that I have today is beyond my wildest dreams. It's ridiculous of what I thought it would have looked like when I quit my full-time job, 10 years ago. I mean, I don't think it can be overstated, what it's already done. And so, my belief continues to compound, to make a bad pun, on, how well this works as you continue to grow. So I love seeing other people take advantage of it too and getting excited about it.
So what it means to you. So I've heard what it means to you as far as like I could get hit by a Mack truck and I could be in the hospital in traction and my wife and my kids would be safe and sound and we would work it out.
Right.
And I get that. But what does it mean to you on the inside? Like, is it freeing? Is it releasing? Is it
It's
exciting?
freedom. Yeah. So that's the thing about it. It's not that like I don't sit on the beach all day. I work my tail off. Actually, I work 60, 70 hours a week and I love doing it. But I think that's exactly it. I did a lot of searching on this and why it feels good to be there. It's not that, I mean, what the heck would I do? All my friends also have young kids and jobs. They're not going to go hang out, with me during the middle of the day. But
Right.
It's the freedom. It's the feeling of freedom and security that it brings to just know that, hey, I'm not only am I in a good position, but pretty sure I just set my family up for generations to be able to take care of themselves. And that is an amazing feeling. It's the peace of mind more than, the dollar signs or what you can buy that is really life-changing.
I have a life insurance policy on my daughter and on myself as well. And I call it my idiot-proof plan. And I was explaining this to this lady who files my insurance. And I said, so if I'm a complete idiot and I frick up everything I'm holding right now, at least when I die, my kid's going to get a really good insurance plan. And since I have an insurance policy plan on my grandchildren have the same idiot-proof insurance plan on their mom. When she dies, there's going to be a nice chunk of money. And since I got it on her at such a young age, it's an even better policy than mine, right?
Yeah.
So it's my, not only am I trying to build my own portfolio and equity to pass to my daughter intact in some version when I am, ready to say, hey, I'm done doing real estate, honey. You manage it all because it's going to be all yours someday, sweetheart. Right? Like that transition is in the back of my brain somewhere. There is this sort of idiot-proof policies as well that I have, right?
Well, I think the illiquidity in real estate does us a lot of favors on that topic. So, if you have things in trusts and it's arranged appropriately and it's professionally managed, right? If you pass down a whole bunch of stock to your kids and they just sell it and blow it, it's over, right? But making real estate difficult to transact with, I think, helps us a lot. It helps us make less emotional decisions when we're considering what to do. And I think it helps us create that multi-generational wealth just by nature of some of the problems that people like to point out, actually.
Yeah, it is part of the problems. It's illiquidity is also, I find it's also part of its advantages in having to do with forecasting.
Yeah.
Right. And if you're trying to do stocks and bonds, a newspaper article comes out and the whole thing just starts, having its own conversation and nosedive going on, whether you're prepared for it or not. Real estate, at least there's this transactional period,
Right.
which
Slow moving.
forces the overreactions to slow down and have a longer term trajectory and planning be in place, because you're going to be in the middle of this transaction for anywhere from minimum 21 days to 90 days.
It does us a lot of favors.
Does
Absolutely.
us a lot of favors. And I'm just not smart enough to try to stay up with or I'm either not smart enough or I don't care enough to stay up with gossip conversations in the stock market. Because to me,
No.
it feels like a lot of gossip. Find gossip's defining value. And I'm a little like, yeah, I'm against that as a human being, having gossip define value on my friends or on myself. I'm against that in stocks too.
Yeah. Never mind the lack of control either of the asset.
Never mind the lack of control. Okay, so how do people get a hold of you? So right now they're seeing Buckingham Investments, they're seeing the website for Buckingham Investments.
There we go.
And you said that there is also some good content information here that you wanted to highlight.
There's all kinds of stuff that we've got. So we're the chapter leader for the Long Beach Phoebe organization. So if you go to learn and hover there, you can attend an event, you can watch the video section. The watch or listen section there has got hours and hours and hours of content, including a whole, if you want to play golf, you can play golf. We're going to talk about redevelopment opportunities. But yeah, if you go to that learn and then watch
where do I find the videos? Is it under
go hover over learn
and
then go to watch or listen. There you go. And there's got to be 50 hours of video content on here. We just did a super comprehensive full day workshop just a couple weeks ago in March. So this is all up to the minute stuff on what's going on in 2021. We had some incredible guest speakers. So if you're really interested in more detail about what I was just talking about, start with the 6 hours that's right there. And if you want to reach out to us, feel free. We've got a Calendly scheduling app there on the website, so you can schedule a 30-minute Zoom meeting with one of our agents if you want. My email is anthony.walker@Buckingham.
What I want is your email. That's perfect. Okay, I interrupted you. I apologize. You started giving your email, and then I interrupted you about how important it was to give your email.
Yeah.
Give your email.
Anthony.walker@BuckinghamInvestments.com. That's me. Or just give one of our offices a ring.
Yes. So the phone number. So which office are you in? Are you in the Long Beach office?
I'm usually in Torrance is our headquarters. So I'm in Torrance today, but I bounce around between Torrance and Long Beach a lot. El Segundo is Marty's office. That's mostly his clubhouse.
Yes.
So,
I've been to the El Segundo office. So yes.
Yeah, that's the original. That's the OG office.
So the phone number for the Torrance office where people can find you is 310-982-7055.
That's right. And if you scroll down a little further,
yes,
if you're a tech savvy individual.
No, I don't know that I am, but that's
there
okay.
You go.
So there's the schedule a meeting with us.
You can pick any meeting you want that works with your calendar, and boom, you'll be right in front of one of our agents.
And there's the analysis session right there, 30 minutes having a conversation with you guys. Thank you, Anthony, so much for your time. I so appreciate you hanging with me. We ended up going a little bit over an hour, but I really thought the 45 minutes I normally plan, I think we're almost an hour. So thank you very, very much. And thank you for just being an individual in my community. It's wonderful to have you as a fellow Phoebe chapter leader. It's great to have you there and taking over that Long Beach meeting and giving it, life and consistency and all the wonderful things that a Phoebe meeting can have. And I assume you guys are online because I see it go by on meetup.com all the time.
Absolutely.
So this is lovely. So thank you, Anthony Walker with Buckingham Investments. I am Christina Suter with the Real Estate Breakthrough Show. You can find more information on christinasuter.com, or you can go to Phoebe Pasadena YouTube or Christina Suter YouTube, and you will find free information and content there. Thank you so much.
Thanks, Christina.